coronavirus outbreak rattled the stock market for months and is still showing signs of uncertainty. Certified financial planner and president of Shakiba Capital, Trevor Shakiba, has more on this now. Trevor, welcome to the show. And my goodness, earlier this week, I felt like we had just sort of bounced back and recovered. We looked at these numbers, we saw the climb, and then yesterday it had the biggest single-day drop since the coronavirus drama began. So what's up, dude? What do we make of this?
Yeah, that's a great question. In fact, I was so excited to come on and tell everyone that basically we were back to where we started January 1st. And then, like you said, yesterday, the market was down substantially, 6%, almost 2,000 points on the Dow. But still, we've come back a lot. And so the thing I just want to highlight is to give you a little bit of perspective is February 12th, the Dow is at 29,500. We're bouncing along. Everything's great. And then literally 35 days later, we're at 18,000 on the Dow, which is about a 35% pullback, quickest correction ever. And so, look, we are certainly not near 18,000 anymore, but it's going to be volatile still getting through the rest of this.
Okay, so what do we take away from this, Trevor? What can we learn from this? Because you've always told us, don't be emotional. No one has a crystal ball. There's no such thing as timing the market.
Yeah, exactly. And so if you didn't believe me over the last 2 or 3 years about timing the market, you've got to believe me now because the market has been so volatile, so quick. No one could have predicted or timed it. This is the best example to go 35 days and to be down 35% and then to come back. Not all the way, but close to it in the next 2 or 3 months just shows you the difficulty in timing the market. You've got to get two things right, not just when to get out, but when to get back in. So again, yeah, you don't have a crystal ball. That is not a coherent long-term investment strategy. Have a plan, think long-term.
Yeah, nobody's psychic, right? Allegedly. Okay, let's say for a lot of folks who maybe are not actively looking at the stock market or actively day trading or investing. Let's just say people have a retirement account. You know, they're worried about their retirement, their savings, and their 401ks. What should someone do watching what's been happening with the market?
Well, I mean, first and foremost, you need to have a plan and you need to have an appropriate allocation, which means your mix. Based on your risk tolerance, equities or stocks to bonds. And then you need to have confidence in that and think about this long term. Now, a lot of people there, unfortunately, panicked and did get out of the market altogether. Understandably, I get it based on emotion. But my advice here is don't just wait thinking there's going to be another pullback. At some point, you've got to get back in. That was a mistake. No problem. Look forward. Let's figure out how to get that cash back in, maybe dollar cost average or getting a certain amount every month. But remember, to really see growth, you've got to be invested. You can't just sit in cash. And as we talked about, interest rates are so low right now, effectively, you're losing money sitting in cash.
Okay, got it. So just to underscore what you just said, for a lot of people over the past few months who maybe panicked, they took money out of their investment accounts or retirement accounts. You're saying now don't just sit on that cash. Find a way to get it back into the market with a strategy.
Yeah, exactly. Because what I found is a lot of times you'll get out and then you'll just keep waiting as the market recovers. And then you're in no man's land just sitting in cash and now the market's fully recovered back to where it is. You've got to get invested and remember what your long-term objective is here, which is a good return based on your risk tolerance to achieve your long-term financial goals.
Yeah, and now is the time, as you've mentioned on the show before, that really good investors see volatility in the market as an opportunity to make even more money long-term.
Yeah, exactly. So, you know, looking at yesterday, it wasn't a great day, but if you are still waiting and you've been in cash, that might be a good opportunity now to get back to that preferred allocation, put that behind you and stay focused on those long-term financial goals.
Trevor, let's talk, though, about the rest of the year because, again, earlier this week, we saw the stock market doing so well, right? And it seems like investors had more confidence. Then, with all of this talk of maybe a second wave of coronavirus hitting our cities, it seemed like the market fall, that big drop we saw a couple days ago, it seemed to sort of coincide with the COVID fears. So with COVID maybe may be coming back for a second round, according to the medical experts, and also the fact that this is an election year, which typically brings volatility to the market. What if people are just worried about investing in the market right now?
Well, I think those are all valid points, Derek. Look, when it comes to the market, anytime there's uncertainty, the market hates that the most, and you're going to see a negative reaction. We certainly saw that yesterday. And yes, it's still an election year, 4 or 5 months. Who knows what's going to happen? But the bottom line is that there will always be reasons not to invest, or there'll be something else to worry about. Remember, no one ever got wealthy. This is a Buffett quote. No one ever got wealthy betting against America. So while we're not perfect, and yes, it's going to be volatile, and yes, it's an election year, stay focused on what's important, which is investing in great companies that are gonna grow over time, adapt and evolve, and hopefully increase their earnings and profits. And that is going to pay off for you long term when you're focused on retirement and some of these other long-term financial objectives.
And Trevor, we're out of time, but before I let you go, one last question. You have always talked about the importance of having a nest egg, right? Typically, we talk about having maybe 3 to 6 months in savings, but considering what we've seen over the past few months, so many people out of work who are living paycheck to paycheck, do you have any updated advice about how much money we should have in our savings accounts?
Yeah, no, I think that rule still applies. But again, if you didn't recognize that or adhere to having a cushion, please adhere to that moving forward. There's going to be recession. We're going to have pullbacks, and that's what that's for. Thankfully, we've been helped through the government, through stimulus and unemployment and all those things. Remember, that is a fantastic thing that we have here. A lot of countries don't have that. So absolutely take that seriously. If you don't have that 3 to 6 months, start building towards it. And if it makes you feel more comfortable or confident, then go towards a year. But it is critical. The cash reserve is critical.
Trevor Shakiba, thank you so much for your advice. It is great to see you. As always, if you would like to connect with Trevor, you can visit shakibacapital.com.